All right, we are live. Monday morning. Monday morning. Let me share this out to where I need to share this. Get this out into the world live now. Emmanuel first. I love it. Love it. Let me tweet this out live. Monday. It is Monday. Damian, Cameron, Uriel, Skasky, what's up? Live market open. I had a weird dream last night, guys. I'm not gonna lie. I had some weird dreams. I hope the audio is good. I finally got the big mic connected, so the audio should be decent from before. And should be pretty strong. Juan, what's up? Trucker Trey, what's up? Sup, Amitinol, Everclear, what's up? All right, we're gonna get started. Let's get into this market. Back to business. Yes, ma'am. Felicia, back to business. It is Monday. We got to get back to business. Richard, what's up? The markets are red, pre-market, not too red, but obviously not the most green as well. Bitcoin is down pretty badly. So where is our good old friend Bitcoin? Yeah, but not below 19K. Dow was down 200 points pre-market. Bitcoin is now down to 18.75. Remember, the low on Bitcoin was about 17.6. So getting below that, getting to the 16s will be the low on Bitcoin. Ethereum down from 1,600 to 1,300 as well. AMC down 10%. Oh, well, no, it's up. It ended 10% on Friday. It's up 0.78% on the pre-market right now. Let's go to Tesla. Tesla is down pre-market. It's about $300. DNA, Ginkgo Bioworks, new position I've created, down about 1% pre-market. Palantir down about 1.67% pre-market. Coinbase down about 4% pre-market. Adobe down another 1% pre-market. So it went from 300 to 294. Adobe might just, Adobe might get hit a little bit harder because the market did not like that acquisition. S&P down to 382.76% pre-market, and Facebook down to 145, down about 0.62% pre-market. Did you invest in CleanSpark? I did not invest in CleanSpark. I did for those who saw on my channel, we did the interview with the CleanSpark executive chairman yesterday. It's an exciting company, exciting stuff. I think the valuation is probably ridiculous right now, just in terms of how low it is. I'm just not that bullish on crypto writ large. So I think it's a good arbitrage purely off the fact of the valuation, but I don't believe in crypto. So I've made a position in a couple new stocks, right? One is SoFi and one is DNA, Ginkgo Bioworks. I'm going to have a lot more coverage on this channel on both of those stocks. And I'm probably going to be making 2 separate Twitter accounts just to be able to cover those stocks. I'm actually really excited for those stocks. The amount of research I've done on those two far supersedes the amount of research I've done on a stock like CleanSpark, even though I've talked to their executive chairman. And so when I invest in Ginkgo or SoFi, I'm really in it for the long term because I believe in the company. Same thing with Palantir, right? So they can fall and I can keep DCAing. With CleanSpark, if they fall, I have no idea why I would have invested outside if it was for an arbitrage play. And that, I've done that before with investing and it just feels weird because it's just like, I don't know how to justify continue holding it at that point, right? And then you just feel like your money's stuck in something and it doesn't feel that good. Google at 101.80. I initiated about 5 shares of Google on Friday. Happy to pick up more Google if it drops below 100 because it's Google. I'll probably do a video later on my thesis for why I bought Google, but I mean, it's Google. It's trading 14 times free cash flow. It's never traded below that. It's traded below that once or 2 times at 12 times free cash flow. But it's not. It's cheap by all merits given the historical presence of Google. Does anyone dream that their portfolio see massive gains only to be disappointed once you wake up? I do, especially right before the Fed meeting. Yeah, we have the FOMC meeting on Wednesday, I believe, right? And they're going to be announcing if they do 75 or 100 bips. I'm pretty sure it's going to be 75, but I was talking to Alex from ticker symbol U last night that said it might be 100. And if it's 100, these markets are not going to like it, but it might be the thing that we need to do. Do coverage on Google too. I will do that. I will absolutely do coverage on Google as well. Can't wait for the SoFi and DNA stuff. We got 2 videos dropping today, and I'll let you guys know the Twitter accounts in those videos that, in the description of those videos, because I didn't say it in those videos. And you can follow those as well. Just like I made daily Palantir, I'm thinking of making 2 accounts for SoFi and Ginkgo and have my coverage not exclusively, but on there so that those accounts can grow the followings of those stocks. So it doesn't only have to be on like my account. Just makes it easier. Harmsy, awesome. I'm happy you're excited for it. Ginkgo Bioworks is really exciting right now. And Kathy buying 100 million shares. Gabe, that's a stock I think you need to look into. It's really exciting. Amit with no love for Rubicon. Never had a ton of love for Rubicon. Never cared too much about it. But nonetheless, Teladoc at $30.29. Square at $64.30. Let's go to ARK. By the way, the market is going to be opening in about a minute and a half. ARK is at 42. Down 5% pre or down 1% pre-market. Our favorite bull, Tom Lee, has come out and said that he expects a rally, which, of course, Tom Lee. We're going to probably react to that video in a little bit. But I mean, I don't know, man. Maybe we're going to have another rally before the end of the year. Who knows? I'm starting to get excited for some other tickers outside of Palantir that I'm developing positions in. But we're going to see how it kind of plays out. Get the bell ready. The bell is ready. We have market open in 42 seconds. For anyone who does not know or is new to the channel, this bell right here is what I believe has made my channel the channel that it is today. Being a little dramatic about that, but we know Chris is not here. He would have put it in the every class. Like, is Chris here? Double down the cowbell. Chris doesn't like it, but I like it. I'm like, this makes sense to me. I like it. All right, we have 15 seconds until the stock market is official. Remember, guys, do you remember the OGs that when there was a delay when I used to use OBS and there was like a 50, I had to like time the bell just to make it sound on time. And then I was like, fuck it, we're just going to use StreamYard at this point. This is dumb. All right, on September 19th, 2022, the stock market at 9:30 a.m. Eastern is open. Wake your ass up, no matter what you're going through, no matter how hard it is, no matter all the difficulties you have, the stock market continues to be open, and that's why it's so cool to be into stocks, because no matter what's going on in your life, stocks are trading. Tesla, $298. DNA, Ginkgo Bioworks, down about 2%, $292. Palantir, 770, down 1%. Coinbase, 71, down from 74 from pre-market. Adobe, 297, down from 299, ending pre-market last week. Facebook, 145.89, down from 146, ending on Friday pre-market. SoFi below $6. I will get my buys ready, but let's see how much lower it can get. 596. Apple, wow, down below 150. We're in the 149 range now for Apple. We are here. We are here. Biden had some interesting words yesterday. I usually mute during cowbell. That is fake news. Moving on. SoFi, $5. AMD, $75.94. Pinterest, down 24. Google, wow, 52-week low for Google has been reached. And I want to see it get even lower. I would absolutely. That's why I didn't buy a lot of Google. I bought like 4 or 5 shares. I'm like, all right, let's start the position, but let's get it lower. Spotify, down below 100. I was watching an interview yesterday with the CEO of Spotify from 2018, really trying to understand their business model. Spotify, to me, let me say, by the way, I think is undervalued. From a pure technical perspective, when the bull market comes, I think Spotify will rally, just like every stock will rally, to be honest. That's why I think starting positions, if you want to start buying, makes sense. But I think their actual business is in a really, and people are going to say I'm biased because I have an audio started, but I genuinely believe their business is in a rough situation. They do not make money from music. And the more subscribers they get, the more music that's streamed, the more they have to pay out to the record labels. It's an interesting business. And I think it's a great product, but they don't make any money off the music. So then the question is, do they make money off anything else? And the answer to that is no, at least for now. But we can talk more about that later. Rivian, 38. I haven't checked out Rivian in a while. Roku, 72. Where's Amazon? Amazon's all-time high was about 140. Amazon's sitting at 120. I don't know, is this the right Amazon? 122. It's at 44 on the RSIs. Interesting. I watched the interview yesterday with Andy Jassy, CEO, at the Code Conference. I like that guy. I really like him. He sounds like he knows what the hell he's doing, and he has a lot of thoughts on how the business can be improved and how the infrastructure. He came up with AWS, the concept, so it makes sense that the guy understands what's going on. Tesla going back up to 300. So Amazon is interesting. Now, I'm not a buyer of Amazon yet because, well, here's the thing. If you think that cloud computing is in its infancy, which hint hint it is, Amazon's a clear winner. And it's pretty obvious that things are going to get better. I think 122 is still a little bit expensive right now. It's a little bit expensive for me right now. I would like to see it to like the 110-ish range. And if we get and that's why I'm rude. I mean, I wouldn't be mad if the S&P goes down to 360 because we would just get amazing prices all across the board. Amit, love your Palantir and SoFi analysis. Have you looked into ChargePoint? I've heard of ChargePoint. I've not looked into them. I can look into them and do a little bit more of a deep dive if there's any interest. I have heard of them a while ago, but I have not looked into them. Hey, you bought Google? Yes, I have bought Google. Morning. Appreciate the consistency on the lives. Juicy Food, thank you for being here. Appreciate that a lot because it's a grind, but I love doing it. All right, let's go to Tom Lee and let's see what this guy is talking about. Here we go. Let's see what he has to say, and we'll keep going from there.
One steadfast bull, though, sticking to his case for a year-end comeback. CNBC contributor Tom Lee, he's the head of research at Fundstrat Global Advisors. He joins me now. You know, Tom, I have to admit, when I have you on, people say, why you keep having him on? He's too bullish. He says the same thing about being bullish every time. And I say, I got to have you on because everybody else is negative. So we got to press the case and find out how you can remain so bullish for the remainder of the year in the face of what is overwhelming negativity from most. How do you stay positive, thinking that stocks can still do well when most others think they cannot?
Scott, I think that a lot of this has to do with, I don't think the right word is myopia, but I think investors have what I call recency bias. You know, that we've got really bad inflationary data now, and we've got negative price momentum. And in that combination, investors basically are negative, but they can't necessarily see how things can inflect. And I think one of the most important inflections that has already taken place, but the second leg comes early next year, is that inflation has peaked. I don't think the August CPI report has changed that. And if you look at what the bond market's saying, it's saying that by the middle of next year, inflation using swaps is going to be around 2.5%. So we're talking about inflation dropping from 8% today to 4% early next year to 2.5%. And that means the Fed's, in terms of...
That's the big deal, right? So he's saying that the August inflation report did not change that inflation peaked. So it's just like it didn't go down that substantially, but it still means it peaked, which means 2% inflation for next year is very possible, right? And if that's the case, if we get 2% inflation next year, along with 2023 being a midterm year, being a year after the midterm year, which historically has returned 33% on average for investors the year after the midterm elections, which is what happened in 2018 to 2019, there could be a massive rally, and we might have avoided a recession if we get inflation down. But it all depends on if inflation actually goes down.
Hiking is going to be done sometime early next year. That didn't change with the August CPI, though. Maybe the level of hikes that we're getting into, but the data, those peaks, isn't changing. And what I think is the most important is when the Fed is sort of vanquished inflation, and even Alan Blunder said, this is kind of a young inflation, not going to take decades to fix. Then corporate America is emerging from a time where they survived COVID and didn't see profit margins collapse. And then they went through a 2-generation level of inflation never seen, and then they survived. To me, that's going to be taking out a huge tail risk out of equity risk premium. When we see markets convinced inflation is broken, PE is going to go up dramatically. And I think that's the mood change that's going to take place. We actually think it could happen as early as the October CPI. which is in a few weeks. So yes, we are sticking to our constructive view, but again, I think we're trying to look past this recency bias.
Yeah. Speaking of recency, FedEx, that doesn't give you any sort of pause that it's a canary in the coal mine, that it's the first of many to come out and warn, and therein lies the biggest problem?
Scott, you always have to pay attention to transports because they're a pretty good real-time and early sort of barometer of economic activity. But I just think we've got to mitigate that in three ways. Number one, FedEx pre-announced it's down 20%. And on the day that it pre-announced and it's down huge, the market's down kind of in line with some of the weakness all week. It hasn't accelerated the sell-off. Secondly, we don't really want FedEx to announce upside surprise to earnings because I think then you'd see markets raise up their hands again and actually raise Fed expectations. In fact, we saw the 10-year kind of cool today. So from a timing of what happens next year, it's actually a good thing. And I think the third thing just to keep in mind is, FedEx, and there's a lot of commentary about that today, it shouldn't be a surprise to the extent that they did build up a lot of capacity into this year. And we've got a slowdown in the rest of the world. And, if investors think that you got to take down earnings for the market because of FedEx, that might be true, to some smaller beta, but they're forgetting that the PE is going to change dramatically when inflation risk is taken out of equity risk premium.
So it's a fair argument by Tom Lee around the FedEx question, because the FedEx question really did scare a lot of the market. I think that's what caused the further market decline a while, like on Thursday, because the chair of FedEx said we're headed for a global recession, and because they're not seeing the same types of levels of demand that they were used to seeing. Right? Let's go to the max. We saw here they were at where were they at? They were about 200, went to 164. Right? Sitting at about 39.68 on the R size. So FedEx could be the canary in the coal mine in terms of it's just this one thing. And when inflation gets down to normal, PEs, price to earning ratios on most stocks, especially tech stocks, are going to start to soar. If inflation actually gets down to 2% and we figured out how to have a soft landing without causing a recession, which I think the Fed is worried about, which is why we might get 100 bips over 75 bips, because they want to get there, but they don't know if 75 is enough to get there. And if 75 is not enough and they want to rip the Band-Aid off and just get there, then that might be a better approach. Then tech stocks explode. The Rokus, the Zooms, all these stocks. We have a market euphoria because there is zero reason for interest rates to stay that high, which means inflation is not going to be that big of a deal, which means the amount you're paying for the amount you're paying for $1 of future growth is not going to be as expensive because the cost to borrow capital will not be as expensive as well. So you're going to see something like a Snapchat that also goes very high as well. What did Biden say about China? So Biden said that if Taiwan was invaded by China, the U.S. would help. Now, he wasn't really supposed to say that technically. His White House chief of staff people kind of clarified what he meant by that, but he said exactly what he said. 60 Minutes, he did an interview with them yesterday. They did not leave that out of the interview. They said, hey, if Taiwan is invaded, would the United States defend them? His answer was yes, which is not what we did to Ukraine, by the way. We did not defend Ukraine. We gave them money, but we did not defend them, which is why it was a bit of a shocking statement because, what's the difference between Taiwan and Ukraine necessarily, right? Why didn't we defend Ukraine? So I don't know if we would defend Taiwan militarily, because if that risks a world war or at the beginning of a world war with China, that's probably not a good thing. And it's so interesting how history plays a role in this, because chances of that happening are zero. Is the chances of China invading are zero, or chances of the United States helping are zero? Because China invading might not be zero, but the United States helping, I think, might be zero. Amit, I'm writing puts on DNA today. Gabe, you're bullish on DNA. Not bad. Do you know what they do though, DNA? Gabe, you kind of made that decision pretty quickly. 11% ROI in 3 months. DNA is interesting. I'm understanding a lot more about the fundamentals of them. But so the thing about China, right, is it's just so. If China gets to invade Taiwan and they get to reign their supremacy of dictatorial authoritarian regimes that can do whatever they want, this is what we fought hundreds of years for, to be able to get to this point of the world. And if that just happens again and the United States doesn't stop that, you're just looking at this superpower that's going to try to do whatever they want. And that's scary. That's like really, and that's why it's nice that Ukraine is actually, from all reports I've read, beating Russia in the war. I mean, that's a great thing to do. So we'll see. Yeah, you're right. The United States helping is probably less than 10%. I mean, it's going to be interesting. Tesla's still doing well, 304. Market is down today. Let's go back to the S&P. Where are we at? 384. So markets are down not that much from Friday, to be honest. They're doing okay. Wejo at 109.5. Zoom 78. SoFi right above 603. Yeah, so like the little decline we saw in the morning, Google back up, everything's kind of recovered technically. The little decline we saw, things are kind of back to where they were. Okay, let's look at another video on the former vice chair of the Fed talking about the Fed needing to execute their current strategy. What do you think about the Russia-China-Indian alliance, fake or just basically a good trade deal? I think India just wants cheap gas. I don't think there's any alliance. Maybe there is, but I really don't think there is. So we'll see. Amit Palantir is a damn bargain. I agree.
Sure. Jay Powell expected to announce the next rate hike on Wednesday. Joining us now, Roger Ferguson, former Federal Reserve Vice Chairman and former TIAA President and CEO. He's now Vice Chairman of the Business Council and a CNBC contributor. Roger, I don't probably we're getting ready to come on the show, getting all fixed up and makeup and everything. You may not have heard what I said earlier, but I noted a change in tone on both sides of the argument last week after those hot inflation numbers. I think that the middle has gotten more elusive and probably Jay Powell's job has gotten tougher. We had some people last week talking about a need for at least a full point hike. One individual, he's a money manager, he's not an economist, but he's a smart guy, a global guy, said we need 1% to 2% increases to get this under control. Conversely, we had Barry Sternlicht, real estate guy, obviously, but a billionaire who said we need to stop immediately because we're on the precipice. The U.S. economy and global economy is on the precipice of a really sharp slowdown. Both sides can't be right, Roger, and I feel for Jay Powell. Where are you on this?
I'm in the position that says the Fed needs to continue to execute the strategy they've laid out. I think 75 basis points is the more prudent move this time. And I think they have to signal in their, what's called their SEP, the Summary of Economic Projections, and also very importantly, what Jay Powell has to say in the press conference, that they're going to stay on that path. They cannot be dissuaded. And that is because I think inflation is the clear and present danger here. And I think they have to be prepared, and we have to be prepared for what Chair Powell called, which is some pain, i.e. hopefully a short and shallow recession. But getting inflation under control is job one, and moving methodically up this time, 75 basis points and indicating more to come, I think is a better approach.
The hot numbers we saw, Roger, I mean, they were hotter by tenths of a percentage point as far as expectations. So I guess my question is, if you really believe that the supply chain issues that occurred after the reopening from the pandemic, if that's primarily what's to blame here, you could still say those might be transitory, that once things loosen up. So I'm wondering whether you think that or whether you really do believe what some other people feel, and that is that we've just lived way beyond our means in terms of fiscal spending and monetary spending, and that this is deeply ingrained and it's going to take more than a few 75 basis point hikes to get it under control. What do you think?
I think three things. One is this inflation has many causes. One of them that you didn't mention, but is primary in my mind, is very tight labor markets. As I talked to CEOs, and I talked to one just last weekend, he was discussing the fact that it's the labor market tightness that's really driving, pricing concerns and inflationary pressures. So we have to recognize that. Secondly, obviously, geopolitical concerns. We've been relieved that oil prices have come off, quite a bit, but there's nothing that will stop them from rising again. And so there's still some uncertainty there. Supply chains, yes, loosened up somewhat, but we've seen China closing and opening on and off depending on the pandemic and COVID in that country. And so I'd say the inflationary pressures have many causes, and they really aren't clearly and consistently abating. Labor markets in particular are still very tight. We have had, to your second point, a period of very loose monetary policy, and for a variety of reasons, fiscal stimulus as well. Time to rein that in. And I think some people thought the Fed was maybe a little slow in starting that process.
Joining us right now is Jake Clayton.
So the Fed needs to stay and do what they said they were going to do, which is basically what the former vice chair just said, which might end up being going through 75 bips, which is what we're going to see. And ultimately, we're going to see what happens. Overall, everything's pretty all right. I mean, ARK's down a little bit. ARK, by the way, has bought another 1.4 million shares of Ginkgo Bioworks. This is an exciting company for me, guys. I know the price is down. I'm going to come up with some more videos soon in the future. This is one of those ones I think she's gotten right a little bit. Glitch Life, I would be happy to have a conversation with Chris as well. If you like synthetic bio, is my specialty. Historically, it's been a pipe dream, but it was overhyped. Now it's actually delivering. Yep, I agree with you, Glitch. Glitch Life, I've been doing so much research on synthetic bio. Like this weekend, I spent at least 10 hours listening to the CEO talk from DNA. I spent time listening to their business model. I spent time dissecting their entire Q2 earnings. I was literally a nerd this whole weekend because I actually did want to see, does this require like a $5,000 position? Like, is this something that's, really worth it? And I spent a lot of time understanding what synthetic biology is and like what are the merits of it. And overall, my analysis has shown me that Ginkgo is one of the market leaders of an industry that kind of doesn't even exist, that they're creating, and the moat that they will have as a result of creating the app store for their platform to enable all of the apps that run on top of it can be quite substantial over the next 10 years. It's one of those stocks you hold and, you just keep holding. They were recently invited to the White House. They got to do a lot of talking. They helped so much during COVID with biosecurity efforts. I mean, there's a lot of interesting stuff going on in the genomic sequencing world. And that's why I think Kathy's betting big. Like Kathy is 100 million shares of a company is a lot of shares. Also, the float of Ginkgo, which is one of the things I wish we had for Palantir, 90% institutional. 90% institutional. It's the number one position in my folder. I hold a $45,000 position at a price of around $2.9. That's a great average. That's a phenomenal average. So yeah, when you have a 90% institutional float, like it's not too bad. Walmart at 134, Target at 164. These stocks got hit pretty hard. They were trading in the 200s easily early 2022. And, their earnings got hit pretty badly. Enphase is also kind of like Tesla. I mean, it's like, it's 69 on the RSI, but it goes up, man. It grows. Enphase is one of those bad boys that grows. Snapchat, $11. I listened to the CEO of Snapchat talk over the weekend at the Code Conference. It didn't make me more excited for Snapchat per se, because they didn't really say how they were going to grow. It just, it's one of those that it's $11 and you're like, all right, like if they just continue to stay operational, could they go more? But it's not like the most exciting to me. Open Door, $3.99 for $3.99 for. So Open Door is under $4. Has it been under $4 before? Yeah, their 52-week low is $3.94. They're at $3.99 right now. I don't know if they hit that today or if they hit that another time, but Open Door is one of those stocks that I thought was undervalued, but given the housing stuff that's going on, I don't know what exactly is a safe bet to do with Open Door. So probably not that excited for Open Door. I'm surprised the price of oil has continued to fall. I thought it was temporary, but it's actually steadily going down. Yeah, let's look at Brent oil prices right now. Brent oil price. Oil right now is at $89. Brent. $89. Yeah, I mean, I've seen gas prices. In June, I was at $4.93 on gas. Now it's at $3.51, $3.49 in some places. So dropping precipitously and in a nice way. But we just have to see how it goes. Netflix offered their TV advertising package to advertisers. They sent out a memo to advertisers, and they are asking for a $65 CPM starting, what do you call it? Like rate for their ads, which is higher than every broadcast industry advertising CPM that's being charged. So they were asking for Stranger Things and You and Breaking Bad and all those shows to have a $65 CPM. I'm curious what I'm thinking of getting the Netflix ad version just to see the types of ads. Like, I'd be happy to downgrade from where I'm like, well, let's see what type of ads we got. $65 CPMs are, I mean, to give you context, YouTubers, if you're in the finance space, you might get like a $20 CPM. And if you're not in the finance space, you get like a $5 CPM, maybe. Like CPMs is just cost per 1,000 impressions of an ad. And Netflix is commanding $65 for their content. Now, is their content worth $65 per 1,000 views? I don't think so. It's just Stranger Things. It's not like that's that special. It's not like, you know, those 1,000 people are definitely going to buy a product because they watched it during Stranger Things. But I guess it's what the market is willing to pay for it. Microsoft at 243. Their 52-week low was 241. So Microsoft is also like big tech is all at basically their 52-week lows. So if we break the 52-week lows, which means Google has to go under 100, Microsoft has to go under 240, Facebook, it had to go under 150, but now it has to go under 140. Then we are officially in that world. Where's the other big tech? We have Microsoft, Google, Amazon. Tesla is the only one that should be in big tech that's not falling below its 52-week. Tesla's 52-week low is 206, and it is not fallen there. It's interesting, man. It's interesting. Amit, how do you feel about streaming services basically being cable companies with ads? Netflix became huge because you could cut the cord and get a lot of shows on one platform. How do you need many? Well, I think streaming is dead. Streaming is not dead. I think cable is dead. There's still 80 million people on it that are eventually going to go to streaming. It's just about diversity, right? So like you're going to have multiple subscriptions if you want diversity of content, or you're going to have Netflix, or you're going to have Netflix with ads if you don't want to pay as much for it. I do think it's a bit different than regular cable because like the algorithmic ability for Netflix to show you a new show and for you to get into that rabbit hole versus like have to watch a show at 7 p.m. every day or 7:30 p.m. only on Fridays. That's the difference, right? And so instead of like having this non-asynchronous schedule with the viewer and the television and having to go through channels versus just having everything you want in one place, that's the difference. Even if the price point, if you buy multiple subscriptions, is not the difference. And that's what we're going to see is going to happen. I hope their ads don't progress like Spotify's. Remember when it was actually 30 minutes uninterrupted and they only play 2 at a time? Now it's pushing 5 or 6 ads every 5 or 6 songs. Yeah, I mean, again, I was digging into Spotify's business last night, and it's just they're growing users, which is great, but they can't monetize. And that's why they're buying podcasts. They're also getting into audiobooks, and I think they're going to make the exact same mistake they're doing with audiobooks with podcasts. What they're going to do with audiobooks is they're going to take the biggest audiobook authors and just put them on the platform. And the problem is all the newest audiobook creators are not going to find an audience on Spotify's platform. They're just going to have to drive traffic from their existing audience, which to me destroys the relationship that a creator should have with a platform because the platform's not actually allowing the discovery of your content. And this is exactly what they've done with podcasts. If you ask any podcaster how much organic discovery they get from Spotify, it is zero. Same thing with Apple, same thing with all the other apps. Podcasts are hard to discover. It's kind of the reason I'm trying to solve that problem. Link in the description to sign up to my startup. Would really appreciate you guys letting me know what you think about it. So we've gotten over 180 users over the past couple of days. So really, really exciting growth that we're seeing. And now we're just trying to keep going from there. So ultimately, I think that Spotify will grow users. They're going to be able to, maybe grow top line revenue, but gaining a profit off of the music industry is difficult. And unless they start owning the music, which means they'll have a better relationship, a better cut than giving it to Sony and UMG, which accounts for 87% of all the songs that are streamed on their platform, I think it's tough to justify being long on that company outside of the fact that they're going to get more users, but are they going to ever be able to monetize in a meaningful way? That's my question for them. No one talked about how Amazon kneecapped the streaming moment they released the Fire. So yeah, that's also true. That is a good point. Netflix needs to do physical platforms with their content like amusement parks. It's crazy how much Disney makes their IP on parks. I agree. I mean, Netflix's next phase of growth to me was not ads. It was build a ton of infrastructure around their IP that they have, that they exclusively own, that they've created really well over the past couple of years. and just keep going from there. Gabe just committed 25K to DNA. Okay, Gabe, for everyone to know, that's not an investment. It's a trade for DNA that Gabe's doing. I am actually investing in them, and I'll have more coverage coming out soon. Super excited to talk about them. But yeah. All right. Thank you all for watching. I'll be having a couple videos today. I did a podcast with ticker symbol U that'll be out today. Probably doing some reaction videos. Some SoFi DNA stock videos will be out today. And the market close at 3:45 will be live. And then late night stock talks probably around 9:45, 10 will happen as well. So thank you everybody for joining. Hope you have a great day. Monday morning. Let's get after it. Let's have a good week. Appreciate you guys joining, and I'll see you in the market close. Bye, everybody.